Hi everyone, today we're talking about what bank account is best for your savings. For those of you that haven't met me, my name is Angela. I am your money messenger. My background is in financial planning. I've been working in that industry for over 20 years. I help financial advisors to prepare recommendations for their clients that teach strategies on how to repay debt, invest money, and grow wealth. I'm also an investor myself. Everything I teach you, I do myself, and I know it works. In today's video, we're talking about what bank account is best for your savings. When it comes to bank accounts, we're going to talk about three main accounts today. Everyday bank accounts, high interest bank accounts, and offset bank accounts. Bank accounts are your run-of-the-mill everyday account that you can find at any old bank. They generally don't pay much interest at all, maybe 0.0% if you're lucky, and they usually have very easy access to your money. Go to your ATM machine, pop in your card, use your Google Pay, whatever. You can have instant access, at-call access to your bank account balance is what we call it. These bank accounts are generally best for your everyday transactions, not so much the bulk of your savings. Hold some money in there to keep you afloat from day to day, pay bills, whatnot, but don't hold the majority of your savings there. Why? Because it's not earning much money. It's not doing anything. Your money is not working for you when held in a regular bank account. High interest accounts are just that. They're a bank account that pays you a higher interest rate. Now, when I say higher, it could be 0.1%, it could be 0.5%, it could be 1%, sometimes up to 3%, depending on what interest rates are doing and what terms and conditions are attached to the high interest rate account. The reason you get a higher interest rate is because the banks essentially have your money for longer than an everyday bank account where you've got at-call access to it via an ATM, for example. Now, that could be because it's an online bank account, so it's harder for you to access your money. It might be because there's some terms and conditions attached, like you must have your salary deposited or you must have a certain amount that stays in the account per month in order for you to get the higher interest rate. As an example, rule of thumb, in today's current interest rate environment, let's assume you earn 1% on a higher interest account compared to a bank account, which might pay you 0.nothing%. So keeping your savings in a high interest rate account is great. Keep a little bit of money in your everyday bank account to keep you afloat and for your transactions, but keep the majority of your savings in a high interest account. So you're getting a higher interest rate on your money. If it's an online account, that's great. You don't have such easy access to it. In other words, no ATM card. And if it's held with a different institution to your regular bank accounts, that's even better because then you're not seeing your savings all the time, so you're not tempted to spend them. Now let's talk offset accounts. These are bank accounts that are attached to a loan, usually a home loan, but can also be an investment property loan. The majority of people, if you have a home loan, your bank will generally offer you an offset account. It may not be attached automatically to your loan. You may need to ask them to attach that, and it may or may not have a small fee to set that up. Regardless of the fee, it can be well worth it because the money that is sitting in your offset account offsets the balance of your loan, which is charged interest on. So as an example, say you have a $300,000 home loan and you have $20,000 in savings. If you keep it in a regular bank account, you're not going to be earning much interest at all on that $20,000. If you keep it in a high interest bank account, you might earn 1% per year, $200. Now that $200 will be taxable income, so you will pay a little bit of tax on that when you put it in your tax return. However, if you keep that $20,000 in a home loan offset account, the $20,000 offsets the $300,000 loan balance, meaning your loan balance, that interest is charged on, is now $280,000. So the balance that the bank calculates your interest on is reduced by every single dollar that you have in an offset account. So as an example, if your home loan has an interest rate of say 3.5%, which is pretty common right now, if you have $20,000 in an offset account, over a year, you would have essentially saved about $700 of interest. $20,000 offset account times 3.5% interest rate. It's not interest that you're earning as such in your pocket, but it's saving from paying less interest. The best part is, for every dollar that you save, it's another dollar in your pocket. And money that you save is not actually income, so it's not taxed. It's risk-free, tax-free, guaranteed earnings on your money. Every dollar you save is a dollar in your pocket. Guaranteed, risk-free, 100% return on your money. So the best bank account for your savings, if you have a home loan, is an offset account, because the money you're going to save in interest, which is equivalent to your home loan interest rate, really, that money will far outweigh any money that you will ever earn in a high interest bank account or a regular bank account. There's no negative to having an offset account. If there might be a small fee, for example, one of my loans has a $10 a month fee, but I know that the money I save in interest every year far outweighs that $10 fee. If you have a home loan and an investment loan, maybe you have an investment property, which loan should you have the offset account? Always your home loan. That's because the home loan is somewhere for a home that you live, so you don't earn income on that property, and therefore the interest that you're paying on that loan is not tax deductible. Whereas if you have an investment property and a loan attached to that, generally you'll be renting out your investment property for income, and therefore the interest on that loan is tax deductible. So you would rather have your savings offsetting a loan that is not tax deductible, which has no tax benefits for you, and therefore you'd rather minimize the interest that you're paying on that. So today we were talking about what bank account is best for your savings. If you don't have a home loan, the best bank account is a high interest bank account. Of your choice, there are heaps online. Find one that you're comfortable with the bank and one that you're comfortable with the terms and conditions. If you have a home loan, the best bank account for your savings will be an offset account. Keep some money still in your everyday account to keep you afloat and for your everyday expenses, and keep the majority of your savings in a home loan offset account. Speak to your bank or your loan provider for more information and just check the terms and conditions, make sure they're right for you. So I hope you enjoyed this video today and got some value out of it. If you did, please don't forget to subscribe, give it a thumbs up and share it around to your friends and family. If you've got any questions about money, leave a comment in the box below. I'm happy to do a video for you. Please also check out my new book called The Money Messenger. You can find it on moneymessenger.com.au. In that book, I talk about bank accounts, I talk about high interest bank accounts and the best strategies for you when it comes to your savings, your investments, and even repaying debt faster. I'll teach you how to use the money you earn in a smarter way to get more out of life and eliminate financial stress. Thanks for joining me today. I will see you next week with a brand new video. Bye.